Morning, SteveFreed in Chicago with the morning grain news. Well, it's Thursday, so we'll get some export sales data today. I think the market's looking for 200,000 to 600,000 tons of wheat, maybe a million and a half tons of old and new crop corn, and maybe 2 million tons of old and new crop soybeans. The last few days, we haven't seen any daily announcements of new sales of soybeans to China, so it kind of offered some resistance to the marketplace. Some concern that China may only buy what their minimum needs are from the U.S. until the next Brazilian harvest. Even though corn futures in Dalian, China, are record high, there shows no interest right now of China coming in and buying more world corn or more U.S. corn. There was some earlier talk that they bought maybe as much as 17 million tons of corn to help their domestic feed needs. But right now there's no confirmation of that. So bottom line is overnight corn prices are down, soybean prices are down, and wheat prices are down. Oil's gaining on meal. And in the corn, we saw open interest jump yesterday, which suggests managed funds are adding to their short positions. And in the beans, the open interest drop, which suggests they're taking out their long position in beans. And we're kind of losing in beans some of the China business premium and some of the weather premium. It now looks in that just a short 2-week period of time that the weather has changed, and it's allowing talk of higher U.S. soybean and corn yields. And corn yields could be record. So August 12th, when the USDA comes out with a report, they don't have field surveys, but they do have farmer surveys, and they could actually bump up corn yield. On the demand side, they could lower ethanol and export numbers, and in beans, they could lower the bean export number and adding to the carryout, which would be negative to prices. In corn, we're 7 cents below prices before the bullish USDA acreage report, and there's higher and higher chances that we'll trade below $3. In the beans, we'll probably take more premium off the marketplace. And as far as wheat is concerned, it's a conflict between talk of lower world supply versus talk of even lower demand. So the wheat market is on the defensive overnight and probably will follow corn prices lower. Outside markets, U.S. stocks are lower. And yesterday the Fed basically said they'll be accommodating and keeping interest rates low, which should be friendly to the stock market. And gold continues to surge higher, and talk about 2,300 on the gold because of flight to quality and people moving money into where they feel is safe haven. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, try to treat others like you yourself would like to be treated.